So Airbnb arbitrage is really simple. It's the rent-to-rent model. So you rent the property from the owner, then you put the property on Airbnb, Booking, Vrbo, etc. How you convince them, you pitch them either over the phone or in person. You'll get better results, obviously, in person. What is the advantage for the owner? We're there for the next 1 to 3 years, if not more. We keep the property in showroom condition. Every single check-in, check-out. We have to maintain the property. We're pretty much like managing the property for the owner. We'll clean the hallways, we'll clean the outside areas, we'll shovel the snow, we'll do everything for the owner. If our guest comes in and there's an issue in the hallway, in the driveway, even though it's not our responsibility, it is the guest experience, and we wanna make sure our guests are happy. Witamy to another episode of Straight Up Chicago Investor Podcast. Ja jestem Sebastian I ja jestem z Tomek I z Markiem na tym podcast.
Tak. I'll take it.
He even put our names in. He translated our names.
Yeah, Tomek.
Yeah. That's awesome.
Tomek I Marek.
I love this episode for so many reasons. I love this episode for the focus he has, just like the sense of urgency that I feel like every time you go to a meetup, people are missing. Like, I want to get in real estate. It's a wish. It's not a, how do I do this? And how do I do it faster? Yep. Right? Those two things combined is a very powerful. I'll avoid saying Venn diagram because you make fun of me. But that parlay
I used
very
that word
powerful.
Venn diagram yesterday. I thought of you. But in the episode, we went into some of it, but not all of it. But when you hear the story and you think about the timeline, he had to jump into a lot of things to get to where he's at today, where he didn't know everything. He didn't know all the information. He didn't know what was going to happen 3 months from now after he made the decision today. So that's one of the most impressive things I thought about Sebastian.
And that's what we're doing here, right? Like if you need to know all the answers, then you should work the W-2 job where you know all the answers and know when the paycheck's coming. And like there's nothing wrong with that. But if this is the game you want to play, like, this is what you got to do.
I love that. You just basically guilted everyone into becoming out here. Like, listen, fucking show up or get out.
And when they're 85, they're like, yeah, I'm glad. Listen, that's short, bald dude.
Which one are they talking about, though?
Yeah. Either one of us. All right, why don't we go to housing provider tip here?
All right. So housing provider tip of the week here is FOIA, your Freedom of Information Act. Now, anywhere, whether it be Chicago or the suburbs, you could go on the village website, the city websites, pull a Freedom of Information Act and get a whole bunch of information about the particular building. You usually get permits, you get police records, you get all that. It's just another level of due diligence you can do on any property that you're buying. I pull it every single time. Sometimes I get some information from it, but sometimes it helps me ask additional questions where it's like, all right, so you had a small fire, but now I learned that it leads me to have to figure out they had an insurance claim or maybe they had some extra, they got some work done without permits. So Freedom of Information Act, you as a citizen, something after 9/11, 24 years ago, and you could get in any single town. So make sure you're doing that as part of due diligence.
How long does it take to get a FOIA once you're requested?
Most cities you get next day. The longest it might take is a week.
Okay, so it's pretty quick.
Yep.
So usually your due diligence, you can get in there and get it.
Part of our process is right after we get an offer accepted and you're in that, oh no mode, I have to, is this the right deal? Like you start doing stuff like that, and that's part of our process right there.
Yep, awesome.
All right, today's guest, we've already kind of given a little hint. He's a successful short-term investor, which we don't talk about that much on here. When we do, it really is something we get into because both Tom and myself, we're always curious about learning more. But today's guest, U of I grad, which makes Tom happy. Cutco, cut his teeth on Cutco for 10 years, which is just a specific character trait of a budding entrepreneur. So we're going to hear about everything that he's done here with his short term, how he's developing into a long-term buy strategy. And without further ado, I want to introduce Sebastian Mysliwiec.
Thanks for having me on.
Man, I'm excited. We got introduced by, who did we get introduced by?
Kuval Patel.
Yes, from Second Nature. So yep. That's awesome. And how do you know Kuval?
So we're in a coaching group together. Our coach, Michael Chu, is out of Austin. We work together. We also worked together at Cutco before. Okay. So we sold knives for 10 years, and then we joined the coaching community together, and now we're both in real estate.
All right. 10 years of Cutco, that's a lot, man. Yep. That is like, you're running your own like office and crap.
Yeah, I ran an office in Oak Lawn, managed that for a couple of years, and then Oak Brook for a couple of years, and then retired/quit.
We had someone else recently that had a long stint. They probably know each other. I forgot who it was, though. I don't know. But
that's some good podcasting right there.
Yeah. But man, there's such a direct correlation between people that have done Cutco and their later on success. So what did you really take away from Cutco?
I mean, it's what you make of it, right? It's direct sales. So you start off with a warm network, your warm network, and you just make calls, and then you get, the only way to succeed long term is to get really good at recommendations and referrals and networking. So growing up on the south side, I didn't have the best network, but I got really intentional with asking the right questions to get me connected with the right people to network with. But yeah, the hustle. I mean, families from Poland didn't really have much, so they've always taught me how to work hard, and it was the first job I had where everything I put in, I was getting rewarded from it. So
Sounds simple, just not easy.
yeah, not easy, but simple.
All right. So after you leave there, like, is real estate in the forefront for you at all, or what happens next?
Yeah, so in Cutco, I was there for 10 years. In 2017, I had my best year up until then. So I had 6 figures saved, didn't know what I wanted to do with it. So in 2019, one of our buddies from college, he presented us an offer, a deal that he found that's been on the market for a couple of years at that point. Wasn't selling because it was such a unique property, but it would be a perfect Airbnb. And so we went to a Grant Cardone conference that year, got all excited about real estate, investing, passive income. And so when the property came into our laps and the deal came into the lap, we just kind of ran with it. And that was our first Airbnb arbitrage. He was open to us renting it while he was selling it. Of course, a month after, he got an offer to get the property to sell. So we decided to match the offer, and we ended up buying it and then ran with it from there.
All right. So is this in Chicago? Where's this property at?
That was on Ashland and Grant in Chicago.
Okay. So nice area over there.
Yep.
You don't just go and buy it. You do the arbitrage with him.
Yep.
How do you approach that? Because I feel like a lot of owners be like, dude, get out of here. I don't want to sell the property. Like, I don't want to deal with this.
Yeah, I mean, the reason why we've been able to convince more owners or property managers to do the arbitrage model is because we're there for the next 1 to 3 years. We guarantee rent on time. We do all the maintenance up to $1,000 in repair. So we truly try to make it passive for the owner and not bother them at all. In terms of on our end, on the front end, we do background checks, credit checks, security deposits. We really vet our guests, so there's no like random people that are just going to throw parties or smoke weed in the property or, you know, whatever the case may be. So we're pretty upfront with our guests before they stay, but before we pitch to an owner, we want to make sure they understand why we're different than the standard Airbnb host.
How do you pitch
Wait,
them?
real-
Is this, go on.
I was gonna say real quick for our listeners out there who maybe don't, when we're saying arbitrage, like, wait, what's going on here? Like, let's take a step back
Okay,
real quick. All right, so like, just walk us through like, you know, high level. Just explain. Someone who doesn't understand like the Airbnb arbitrage.
Cool.
Explain it. 101.
Yeah, so
It's different from arbitration.
So Airbnb arbitrage is really simple. It's the rent to rent model. So you rent the property from the owner with their consent, obviously. Then you put the property on Airbnb, Booking, Vrbo, etc. How you convince them, you pitch them either over the phone or in person. You'll get better results, obviously, in person. We've done everything from acting like a regular tenant at first, showing up, pitching them in person, to now that we have more of a brand, more of a expertise in the area, we're able to pitch more over the phone or through an email, and that usually works at this point.
Yep. And what are you, let's say his rent is $2,000 a month, right?
Yep.
You're seeing opportunity, Airbnb, this is, you know, $5 or whatever. Even after you do all your furnishing and all the expenses, like you're looking good there.
Yep.
Are you offering him more than like what he would be getting on market? Like what's the incentive for him or her?
Good question. At first, we took any deal that we could get. So sometimes it would be rent plus 10% profit or a little bit more premium in rent. Now we don't like to do that just because it doesn't make sense. We're able to turn down deals. But what is the advantage for the owner? We're there for the next 1 to 3 years, if not more. We keep the property in showroom condition every single check-in, check-out. We have to maintain the property. So we're pretty much like managing the property for the owner. We'll clean the hallways, we'll clean the outside areas, we'll shovel the snow, we'll do everything for the owner, because if our guest comes in and there's an issue in the hallway or in the driveway, even though it's not our responsibility, it is the guest experience, and we want to make sure our guests are happy. So we try to do a lot of things for the owner and not bother them with any investment property.
But how do you make them? Because you're either walking up, cold email, cold call. Like there has to be all that sounds great, right? And but there still seems to me as a landlord there would be a lot of risk. How do you make the landlord feel what all they're saying, that this is real, I'm legit, I've done this, or even if you haven't done it, I imagine there's a period of time where you had to BS your way through some of that,
Yep.
how confident you could be. Like, how do you instill that in that person?
In terms of the landlord to convince them.
Yeah, like, because that's all those bullet points are great, but it's like, all right, but I don't know you.
Correct.
Do they still run your credit? They treat you like a traditional applicant?
Yep.
And all
They'll
that?
run our credit. They'll check our bank account statements, all that. Even though we still sign the lease under the business, but we are the guarantors, so that does protect the landlord a little bit more. But you have to prove it to them, right? So we do show them all of our systems. So on the front end, what I explain to a lot of landlords is we use a program called AutoHost. AutoHost and SuperHog do similar things. They do ID verifications, background checks, credit checks. They'll actually connect all the IP addresses from that person's cell phone or wherever they've been at, so they actually, it's a secure guest. And then we'll obviously screen them. When we screen them, we'll call the guest before they check in just to make sure they fully understand our rules, they sign our contract. When you have a good guest, you don't have issues. If you cut corners on the front end with any type of guest, chances are they're going to party or bend the rules. So when we convinced the owners and we started, a lot of it was relationship based at first. A lot of these owners did give us a shot based on the story and what we did tell them. But now if a new owner is hesitant, we'll be like, hey, here's David we've worked with for the last 3 years. Why don't you give him a call, have a testimonial from him, etc. So similar to any other business where you have testimonials, you have the proven process that works. They're more than likely more open to it. But yeah.
So are you doing a traditional residential lease with them, or are you doing a commercial lease with the business?
More traditional.
Okay.
Yep.
So I know for us, when we've rented to the groups or whatever, we've rented individual units to make a corporation. We've done a business, like a commercial contract, which then creates a business relationship, which then takes the owner out of anything CRLTO or anything like that I have to deal with, which means if I had to get that person out, that group out, it's a lot easier versus having to do that. So I don't know. I thought maybe that was an approach, but.
Yeah, I mean, during COVID, a lot of people, what they did just left the leases if they were under a business or dissolved the LLC. So a lot of owners will put our names on the leases, if anything, too, just to give them the extra protection to guarantee that we're actually going to pay rent.
All right, so let's talk about numbers on one of these mid-size. And if you either give real numbers, but let's say, your rent with the owner is $2,000 a month.
Yep.
What do you need to be making annually? So that's 24 annual. Let's do annual because it's seasonal.
Yep.
What do you need to be making to cover the cost to make it worth your while, to cover the cost of furnishing the thing, taking on the additional expenses, adding the internet,
Management.
right? Because if it's like, oh, we'll get $3,000, $2,000, it's $1,000. It's like, well, no, that formula doesn't work. You will lose. But what are for our listeners looking to get into this? What are maybe some rules of thumb there that you can help guide with?
So instead of 2, I'll talk about 3 since we just got 6 units in a building.
Cool.
So we ran the numbers on these units. They're 2-bed, 2-bath, right outside of Polk and Western, so right by the triangle there. Those units are projected to do $85,000 each a year in revenue.
And real quick, when you say 85,
that's with cleaning.
That's the gross. Is that before or after Airbnb takes their cut?
So Airbnb takes their cut. So whatever we get paid out is 3% of Airbnb's fees. So all the other fees are towards the host.
Yep.
So all of our revenue that we account for is after fees. So after booking, after Vrbo, after Airbnb.
So after all that, 85 grand gross.
Yep.
Okay.
Every property we take on has to make at least 20 grand a year for it to make sense. What are the numbers you shoot for? If it's, let's call it $3,000 in rent, in the high season, which is the summer, we shoot for 3 times the rent in terms of total revenue. In the off season, 1 to 1.5x. Over the year, you should be at like 2.25 total revenue multiplied by your rents. What do we budget for furniture? 2 to 3x rents is our budget. Some people spend 4 or 5 and they don't get their return back over the year. They might be in for 2 years.
So let me clarify. So if you have a $2,500 rent, you're looking for $500 to $7,500. You're going to put into that for
Furnishing.
Furnishing. Okay.
So let's just call that 85,000 minus 3,000 times 12. That's 50K right there. Furnishing, let's just call it 10,000 on the higher end. After cleaning, we're profiting, I think 25,000 on those units each. Yeah, I think that answers your question.
This episode has not gone anywhere where I thought we were going to go with this, but this is so interesting, and I'm so curious with all this stuff, like, because it's something you and me don't talk about that much, and there's such a huge business out there right now.
Yeah, it is huge. The regulations does make it harder. Obviously, all the landlords that are totally against Airbnb will just hang up the phone, but there's definitely opportunity there. And some landlords do want to raise the rents a little bit, and it's a bigger win for them too.
Is there so I'll speak specifically to arbitrage. Is there more opportunity out there and it's just less people going after it, or you can't grow that fast? Or how's supply versus demand when it comes to the opportunity here for you guys?
In Chicago?
Yeah.
There's not a lot of supply.
Okay.
There's a ton of demand. So Chicago's the number 3 to 5 biggest city in the States. So people are still coming here year round, but with the regulations, people are scared to play in the market.
Let me reword that question. As far as how much opportunity is there for you? How many more landlords out there are there that you could really be getting to if you had the time to get to them and be able to add them to your portfolio? Is there opportunity there to
There's
go
not
deep?
a lot. I'm pitching owners on a weekly basis, and it's either the same owner or people that just don't want to deal with it. So our strategy is more new developments at this point. Who's building new developments, new projects, who's doing the flips, and getting them maybe a little bit higher rents, just like you were saying, for them to refinance the building and do it over and over again.
That's exactly where my head went, because I almost went through this. We just gutted a 6-unit, and I toyed with the idea of doing one as an Airbnb. I didn't really want it because it didn't fit my model, but for my refi,
Yep.
right? On the NOI, like, it's such a big deal.
It's such a big deal.
Of like, hey, if I got this extra amount of rent to prove,
You have no vacancies throughout the year too.
correct. Like on my refi, I'll get an extra $200,000 or whatever. Like, that's real money in my pocket, or me and my partner or whatever. Like,
Now, a lot of lenders are against financing short term, from my understanding. But in this scenario, it wouldn't even look. You'd have a
so this is why I didn't do it, is because I would have to season it there was like 9 months of seasoning.
Yep.
Right. And which on a big building makes sense. On my little 6-unit, I'd rather just, all right, be done, get my cash and move on.
But if you're
But
renting
I see
him,
why it makes sense in
but
those
you
bigger
can rent
ones.
it to him you actually have a 12-month tenant. You don't have to disclose then that you're doing a short term.
Yeah, but you just get credit for the rent with him. So
Yeah, but if you could get a little higher, right?
Yep.
If you have 6 or 8 units and you could get another 150 out of a deal, you might work with someone like Sebastian. Then that's going to help you big time right there in itself, and you could probably lease up faster.
Yep. And I got to assume that a lot of people think about right? You go in the bigger pockets, people always talk about it because it's, the no money or minimal money to get in.
Yep.
But it is like, you really need to know your numbers, because you're not talking about like huge margins here. You're talking about seasonal rents. So it's not just like, oh, this 2-bed, 1-bath is $1,800. Like, it's a little more complicated than there's not a lot. And then there's not a lot of room for error. If you F that up, it's like, oh, I thought I was going to make, I thought I was making $20,000. I'm not. I'm making nothing. And now 100%. I got a bunch of furniture. Cool.
100%. I mean, you have to be dialed in, especially now with the rent prices being higher. The summer's great, but if you book up the summer too far in advance, your pricing is probably too low, and you're missing out, right? And then same thing with the winter. I have so many operators that come to us and they're like, we have no bookings for the next 2-3 months. It's like, you are pricing your property way too high in the non-summer. You're asking to fail, right? So you can't get too greedy in the winter, can't get too greedy in the summer. You can't like, oh crap, we're going into the month with $0 in bookings and just drop prices, because then you're getting some bad guests as well. So there's a game to it, obviously, just like anything else. But a lot of people are trying to play into the game that don't have the experience or all the knowledge, and it's making it harder for everybody, right?
This is a question I have in general about the short-term game. Airbnb, Vrbo, those are 2 popular ones. Is that 100% of the business where you're getting it from, or are you going to try it from other places too?
Booking.com is marketing super heavy right now, but with the political campaign going on or political issues, a lot of people from Europe and Canada aren't coming to the States as much as they were, but Booking is their third. They're pushing like Agoda, Travel Station, Hopper quite a bit right now. A lot of people are tired of the fees on Airbnb and they want something that's a little bit cheaper. So a lot of people are shopping around.
So is that the competition for those marketing companies? Is if they could lower the fees, they could attract more people on both sides, whether it be on the owner side or the user side?
That's like the objective and the goal for a lot of these new websites or these new booking platforms. The thing that Airbnb has is their $1 million policy, is their $3 million liability policy, right? So that protects the host a ton. So if I'm a new host, I don't want to be on all these platforms because chances are I don't have my insurance.
Explain what that means. So explain what Airbnb has that you just said there.
Yes, they have a liability policy and a property damage policy as well for all bookings.
And where does that come in handy for the owner?
Actually, perfect timing. So we got a call 2 months ago that this was 2 years ago. We had a unit. We had 6 units in 21 East Chestnut, Gold Coast.
Okay.
I get a call at like 3 a.m. from the police. Some guy claimed he slipped on the floor and he like broke through the glass and fell. Pretty sure it was domestic violence or something else happened. We got a call 2 months ago from Airbnb's insurance, that the guy's trying to sue Airbnb's liability policy for the property being unsafe. A lot of these cases happen. I don't know if you guys have gone into it yet, but a year or two after they happen, when people forget all the details. Luckily, I had everything screenshotted and recorded when we went to the property, so I knew what happened and the guest told us what happened. So the case didn't end up going anywhere. But you never know. I feel like nowadays people are just trying to milk money from any insurance or any kind of business right now just to get a couple bucks. So like any guest right now, if there's a piece of hair or if there's something wrong at the property, they'll ask for a refund. And then if they slip or if there's something that happens at that property, they're probably gonna want to sue. So
And Airbnb will extend their coverage out to the owner, and that's one of the true benefits about doing business with them, you're saying?
number one. That's definitely the number one reason why people.
And
some hosts are only on Airbnb. They won't go on any other platform.
It's like Booking.com just doesn't offer the same sort of like back end lower your risk protection.
They're claiming to. I don't know. I haven't
proved out yet.
I haven't looked into it too much, but it's definitely not as reliable as Airbnb's coverage.
Yeah. I wonder too, if you just say you have your 3-unit and your Airbnb in a unit, because it's your unit that you live in, you're doing it legally. The State Farm, or like if you had just normal insurance, like do you have to get like a rider for short-term rentals? Like is that so it's excluded. So you're not even covered at all unless you have opted in, correct? Yeah.
Exactly.
All right, so there's your housing provider tip. Opt in.
State Farm does have a policy that covers short-term rentals. No other company. Proper does too. Proper is a company out of London, but those are like the two. And State Farm is they won't pay out.
Is everything you're doing in the city, or are you doing anything in the suburbs?
Mostly Chicago, suburbs, Midway, but those are MTRs only. Midway's hotel policy doesn't allow short-term rentals for the whole area. We have one in Spring Grove.
Really? So what's the parameters on that? So I never knew that restriction.
It's the whole ward of that alderman.
Oh, really?
Yeah.
I didn't know that. You know that?
Did I know that?
It's only midterm rentals out there.
So do you ever have the concern? Didn't New York just recently like banish short-term rentals or something?
They're working on getting it back because rent prices have not gone down or sale prices of homes.
Their whole goal was to lower rent prices, right? That's crazy.
And hotel pricing skyrocketed
Yeah.
in the meantime. So they're working on getting it back, but yeah.
You ever concerned? Is there ever any talks about anything?
Well, let's
crazy?
talk about what they tried to pass right now in Chicago. This is crazy. 2 weeks ago, and it got either pushed or delayed.
Overturned, yeah.
You take the lead on this, but
I forgot what the alderman's name is, but same thing as Midway.
Spasato, I think, up by me.
Oh, yeah. Same guy, or not the same alderman, but same type of thing he was trying to get to happen. Except what he wanted to do was get any alderman the rights in their ward to ban short-term rentals without any approval.
Yeah, so I'm gonna botch this, so please look it up or don't take this advice from me. But right now, if like X amount of the ward votes that they don't want
25%.
short-term rentals, like you go petition in your ward and 25% don't want it, it'll be banned in that ward. That's how the law is now. and he was going to flip flop it the other way, where the only way you could have short-term rentals is if you go and get the votes and petition for it. So he's changing the default from, yes, you can short-term rental unless petition against. There's going to be flip-flop the other way. So you'd have to go fight for it.
Other than the Midway ward, is there any other wards that have voted, have petitioned to do that? Do you know of anything?
I didn't even know that this is how it was done until this all made headlines 2 weeks ago. I had no idea.
I know some towns and cities don't allow it at all.
Yeah.
Hinsdale, I think, is one.
Roselle doesn't here.
Roselle
Someone got
doesn't.
killed, and then like the next week they got rid of it.
Yeah.
Naperville doesn't allow it.
Naperville doesn't. There's a couple other small ones. I think some by the chain of lakes don't as well. Antioch, I believe.
Yep.
There's some, for sure.
All right, so I want to go back to the seasonality. What are some of the tips you have for someone who has a short-term rental and, November's coming, October? Like, do you focus more on trying to get that traveling nurse? Like, what are some of the things you can do to just, get your 1 to 1.5 the rent and float until the next busy season?
Good question. So, to be honest, the last 5 years, we take a loss in January and February, about $1,000 a month per unit. This year, I went to an MTR conference. Jesse Vasquez, I don't know if you guys follow him, out in Cali. He had an MTR conference in San Diego. So our intention was to meet as many like these corporate housing providers or people that work with these hospitals or medical schools, et cetera. So our main focus right now, going into the slow season, is to build these relationships with these hospitals, corporate travelers, et cetera, because we want more of the month-to-month rentals then. So a lot of it is private relationship based now, but there are some new companies coming out like ministays.com. Furnish Finder's been around, but they finally integrated a good calendar that can integrate with your PMS. So yes, the strategy this winter will be most of our units that are smaller, 1 to 2 to 3 bedrooms, will be strictly MTR focused. Through the relationships we have first, and then next month we're going to start doing cold calls and emails to these hospitals that are nearby, travel nursing.
So
et cetera.
MTR for anyone, just midterm rentals.
Yep.
That's anything more than 30 days, and you're basically leasing to them on month-to-month basis.
Yep.
Okay.
Yep.
So we started this conversation off around you got into this doing the arbitrage game. You've bought some stuff as well too, or
Yep.
talk to us about kind of this kind of stuff from the beginning of like you started off arbitrage. How long did you before you bought something? Like kind of give us a little rundown.
Yeah, so 2019, that property we were arbitraging turned into a purchase a month and a half after. COVID was coming. I didn't really believe that COVID was a real thing, so we decided to get 4 pretty huge apartments, 1 penthouse in Wrigleyville, 3 in Westtown that were like $5,000 a month each. And before COVID, that was a lot. So we had 1 property we owned, 3 to 4 arbitrages. So it was about $20,000 a month in rent and mortgage. COVID happened. No one was traveling.
Wow.
Sweet.
Which was tough. Luckily, we did rent out one of the properties to a rap group called 99 Neighbors. So during COVID, they made a couple new albums in that property. Another one, there was a 420 party that happened. So we got kicked out of that building. It's another blessing in disguise.
Right? You get kicked out, it's great though. That solved the problem. It's
Yep.
huge.
And then the owner would not let us out of the last 2. So we pretty much just took out any booking we could get. Then after COVID slowed down, going into 2021, I don't know if you guys know the Cacciatories, but they bought out 21 East Chestnut. We got 6 units with them there. And we had those 10 units for about another 6 months to 8 months. I couldn't really figure out how to scale. So I knew I was quitting Cutco back in the year after that. And once the revenue and the profit that we're making off the Airbnbs covered my bases, I decided to leave Cutco, and then I joined a coaching group with James Murphy. He taught us how to scale. We went from 10 units that year to 35, and now we're eclipsing 70 units, mostly in Chicago, but also in a couple other markets too.
What's the key to scaling in this game, right? Is it just, I know there's the grunt of just, hey, we got to make calls. We got to get more leads. But then you also got to service it.
Yep.
Right. So how, like going from, it's 3X, right? Going 10 to 30, like
Yep.
what had to happen? Like what were some of the things that he taught you that set you up for success there?
He taught me a lot of our scripts were fine, but they weren't fine-tuned. So fine-tuning the scripts, the pitches, the front end of things. As we scaled quick, it was pretty much like throw stuff against the wall. Well, let's build it. Let's figure it out. So we didn't really have many systems. So I was building a lot of the units with my brother. My mom's a part of the team now. We had family members helping out left and right. We had people cleaning from family or friends.
Like in this stage, when you get a unit, are you the one going and getting the furniture, getting it there? Like you're just doing everything?
Not anymore. So
at that point, though.
At that point, yes. Yeah. It was like Facebook Marketplace, furniture stores, messaging everybody, hiring cleaners. It was crazy. But then after things slowed down, so after it went from 10 to 35, we slowed down that year, and we just had to fix a lot of the systems, the SOPs, right people in the bus in the right seats, owning their department, right? So it's definitely been a lot of growing pains, but I finally feel like our team has the roles more dialed in, what they're responsible for, what they're required to do. So it was very challenging at first. It was very messy. Me and my business partner were doing pretty much everything to anything. But now I don't move into units, which has been awesome. I'm not managing the cleaning side of the business anymore, which has been great. Now it's just focused on let's clean up the operations, let's bring on some more people, and keep growing the systems. But at first it was definitely messy.
Yeah, because this is hands-on. Like owning units, like you got to respond to maintenance, you got to lease it up. Like this is daily.
Just daily.
Like this is like I don't know what the math is, but 30 Airbnb units is equivalent to whatever multiple of.
Yeah. I couldn't mention furnishing one, let alone 25 in a single year. You're literally furnishing two places, and it sounds like you're doing it in a very scrappy way, where you're you know what I mean, where it's not, you weren't just going online, clicking a button, and it got delivered Tuesday. Like
it was like driving to Rizal to get some furniture. Yeah. No, it was messy. It was, Airbnb, yes, it's real estate, but it's more hospitality focused. Like you have to make sure your customers are happy. You can't wait a day or two for a furnace to get fixed or a heater or whatever. Like it has to happen right there. So yeah, you are dealing with 3 to 5x messages or calls from guests on a daily basis.
I gotta assume so many calls too, just on the check-in and check-out. Hey, I'm early, can I get in? Or, oh, I can't find the lockbox, or like just those little ones of just like.
Those are the worst.
Yeah, for sure. I just feel like every guest, right? When I stay in Airbnb, I feel like guilty being like, I know this guy doesn't want to hear from me, but fuck, I can't.
So, that was the most annoying scaling. So that's what we had to really spend time on. Like, let's clean up every single system so it's bulletproof so people don't need to call us. If they do, now we have an open phone. All of our VAs are on the open phone. They'll do most of the guest communication. If it's a bigger issue, like with the heat the last couple of days, ACs went out, et cetera. So like, then we'll step in and handle that just because we need to get those things done right away. But definitely the check-in process can be the most hectic, or the checking out. So we try to simplify that as much as possible. Now we're integrating with an app called Enzo, which is a mobile boarding pass app. Essentially think airport check-in, guest verification, but also you get a guidebook, restaurants in the area, upsells. You can all do it on the app, so it'll be a lot more hands-off. And a lot better of an experience for the guests to just have an app with everything on there in Chicago.
Yep.
Versus like having all these documents or hyperlinks.
Yep. Let's go even before the check-in. Marketing. Can you give us some do's and don'ts, whether it be about titles, taglines, pictures, like how do you maximize? Because it's competitive. If you go there and, hey, I want to go to Chicago this weekend, like they have options. So like, how do you make your place stick out?
Good question. So I'll start from, I guess we'll start from location. Location is the most important thing in the business. We kind of ran a case study. We have a similar property in Bucktown, Wicker, and Bridgeport, and United Center. Both similar, all similar sizes. The Bridgeport does the best year-round.
I would have lost that bet.
Yeah, because of the McCormick Center, or McCormick Place, for the conferences. Okay. And also the proximity, it's 15 minutes from the city. Yeah. The second best, you could probably guess, is Wicker.
Yep.
Because of the restaurants, bars, etc. And then it's actually United Center over Logan Square.
Yeah, would have gone Wicker, Logan, UC, Bridgeport.
Yeah. So a lot of people in the city, like if they're traveling into Chicago, they don't know the United Center. They don't know Bridgeport. They just look at what's closest to downtown. And if they're coming to the United Center for a Blackhawks or Bulls game, they're going to go to whatever's closer, right? So that's location. And then when you're...
And in that, are you saying like X minutes from McCormick,
Yep.
X minutes from like
Exactly.
you're advertising knowing that this
in the
is
title.
Yep. Okay.
And then in the title, what you can do is go on ChatGPT, type in I have a property here, create me all the keywords or SEO marketing for this listing. And you just plug in those keywords into the listing, create a whole listing with all the amenities, make it super easy. If you guys don't know this, the first 5 pictures on Airbnb are the most important. So you just want to market the 5 heroic pictures, your number 1 being the best amenity or the best room or the best view of the property. And then the other 4 pictures are not as important, but pretty important after that. What goes into that? Design. So you want to build the home or design the home based on kind of the town, but also the city, kind of the area as well. So we won't have like these crazy like bachelorette themed houses here as if we did in Scottsdale, right? Because we don't have that. We have families, we do have bachelor parties, bachelorette, but it's more like how can we cater to wealthy Wendy, essentially, who's like the rich person that's going to want to stay in this property. So design, keywords, your listing. What else? Yeah, titles we talked about. Amenities. So in Chicago, there's only 20 or 30 Airbnbs with the hot tub. So our goal this year was to put all hot tubs in all of our best properties. There's like 15 with saunas. That's another thing we decided to do this year. People love the outdoor space in the summer. So if you can market what people want in the summer and non-summer and you switch things around, that's going to help generate revenue year round.
Yep. When you're doing this, like there's like no feedback loop, right? Your feedback loop is if you get booked or not.
Yep.
So how are you like making tweaks, or is it just purely like, hey, we're not getting something, let's make a change here?
Yeah, so so there's different reports you can look at. We use Guesty, so Guesty has analytics pretty much on any part of the business. So one we look at the most is the PACE report, meaning you could link your properties with not other property managers, but you can see what the PACE report looks for not only your property, but also for the market, which will then help see if this is just something you're dealing with or this is everybody. But let's say you want to go into the month, it's July, and you go into July with 0% occupancy. And if your goal is 70%, you want to increase that occupancy 2 to 3% every single day to get to that 70%. So if you're not getting that, you have to be tweaking things right away. How do you determine what to tweak? You could do the ChatGPT, find out the SEO words, keywords, etc. But you have to be tweaking. The most important things are the first 5 pictures, the title, and then the description. But if things aren't going well, we'll go back to the property, we'll redesign it, we'll retake pictures, whatever it takes because you'll get that, not instant feedback, but pretty quick within the first week or 2, you'll get pretty solid feedback of how this property is performing or will perform.
Do you take your own pictures or you hire a photographer?
Hire a photographer, yep.
Yeah. Talk to us a little about the actual functionality of the space. So let's just say you have a developer's, building his place. It's a 3-bed, 2-bath, right? Mm-hmm. For a traditional long-term mm-hmm. rental. Like, are you advertising that as, hey, sleeps 8? Like, what is it? Is it truly beds in head, or like where's the cutoff there? Because you don't want to be jamming so many people in.
Good
and you
question.
still need to be functional.
Yeah.
So talk to us a little about, because you're not building the place. You're adapting to what is there for you. So talk to us about that adaptation for Airbnb.
That's great question, because at first we were all about as many heads in the beds as possible. And that's what you'll hear in the whole industry. But if you're in a brand new 24-unit building, where you have to have a 720 credit score to live in that building, and you have 8 people staying in a 2-bed. It's just a shit
Probably
show.
problematic.
It's 100% problematic. So we learned that lesson actually last year. We had 6 units on 16th and Ashland, and we had some units sleeping 8, some 6. And anytime we had the guests with the 8, there was always issues. They would always bring more people in afterwards, have a couple beers, and it just turns into more and more people. So 2 per bedroom if it's a regular condo or apartment. If the owner gives us a chance, we don't want to ruin that chance, right? It's like one thing goes wrong, you're out of that building. They have like a 0 tolerance policy. If it's a single family house, we'll do like either a bunk bed full over full or 2 fulls over full to fit in a couple more people. But it depends on the location. It depends on the streets, right? If there's a family that's been here for 10 years, another family that's been here for 5 years, I don't want 20 people, 30 people walking into that property every single week because they're not going to feel safe. But if I have a single family next to like a grocery store, an apartment building, sure, I'll sleep more people in that building. Our number one thing is trust and safety, not only for our guests, but also the neighborhood. If the neighborhood doesn't like you or what you're doing, you're going to get kicked off the site. Your business is going to go down the drain.
Give us a scenario where you've pissed off a landlord you might have been arbitraging from. Yeah,
go back to COVID. So that penthouse that we had right across the street from Wrigley, beautiful property. It's 420. We decided to rent it out to this guest that wanted a book. They probably had 30 or 40 people having a 420 party, smoking, twerking, music. Owner's like, you're done.
Like, was that a call? Was it a call that night saying this can't happen? Was it the next day? Was it the building?
It was calls, emails, all of it. The tenants underneath felt unsafe. They didn't want it.
How do you respond to that? How do you call a bunch of potheads and say, hey, man, you got to calm down? Or you got to get out?
Sometimes, so we have a security guard now.
Okay.
He'll go to any property if we need to. Once again, if you have everything fixed up on the front end and cleaned up and you're super clear with all your credit checks, background checks, security deposits, you have way less issues. But if you're dropping prices in the winter to increase your occupancy and break even, sometimes these guests might slip through the cracks and we have to call a security guard and get them out of there.
For that particular one in Wrigleyville, what did you do in your systems or process to prevent kind of putting yourself in that situation again?
To not put ourselves in that situation. So yeah, the auto host has been huge. Making sure people always say, oh yeah, I've read your rules. I understand. Yes, we accept it. Now, even though they say, yes, I read your rules. I agree. I'm not going to do that. We'll resend it. Hey, are you crystal clear? Then take a $500 security deposit up to $1,000 depending on the guest. So auto host, when somebody completes auto host, it'll give you either it's a green guest, yellow, orange, or red. Red meaning most risky. So the riskier the guest, the higher the deposit we'll take, or we won't accept them. And then what we also started to implement is before a guest checks in at one of our bigger properties or a property that we have to really do our due diligence, we'll actually call the guest beforehand, give them all the rules again to make sure they're crystal clear. And that's helped. We do have cameras outside every single property. We do have noise monitors inside and outside of every property too. So if they are above a certain amount of decibels, the system will actually call them until they answer to tell them to lower it down. If they don't, then our team will call them. If they don't after that, then the security guard will.
What's a noise monitor? Is that just a piece of equipment that sits somewhere in the unit that's tied to Wi-Fi?
Yep.
That's cool.
Which they've also integrated it now with weed smoking. It also detects your heating and cooling. So if the property's at 90 degrees and it's not supposed to be, it'll alert you and things like that too.
All right. On the flip side, what's a messed up situation you've had with tenants?
COVID. COVID again. So that property we bought, same thing, was COVID. We were accepting any guests that inquired because we needed to. This lady had her daughter's 3rd birthday party and had a couple people there. I went to bed at like midnight. She called me once at 3 a.m., my business partner once at 3 a.m. We didn't answer. we had a call from our neighbor, like 9 a.m. They're like, hey, your fire alarm's been going off for the last couple of hours. Are you guys okay? I'm like, oh, wasn't there today. I'll be right over. I come back and there's a waterfall coming from the ceiling. She left the 3rd floor toilet running all night because she couldn't figure out how to turn it off. Left the property and just 3 floors of straight water damage. So that was the worst.
This passive investment is just sweet.
Yep. So that was probably the worst. Luckily, Airbnb ended up covering all of it.
Wow.
So the adjuster came.
That policy that we talked about before.
It came in super close. Even the adjuster was like, I don't know if I'm going to get this covered because Airbnb doesn't want to pay out a lot of times for things like this. But she did send us a video of her saying, hey, I can't figure this out. I'm leaving the property, to the Airbnb message. So like, I think that's what got it to happen because she proved that she left.
Yeah.
Have you ever had somebody move in and not move out?
No. So those, I don't know the law. You guys probably know more. I think most of the eviction issues are a year. You have to have a year lease. With the under 30 days, you're running more of a business from my understanding, and you can kick out guests if they violate your terms. It's not as much of like the tenant laws.
Makes sense.
Yeah.
So you mentioned some nicer amenities, adding the hot tub, adding the sauna. What are some maybe like the lower key ones? Like, do you need washer dryer unit? Do you allow pets? Like, what are some of those like easier like must-haves for some of these neighborhoods? Washer
and dryer for sure. King bed is the #1 amenity people look for. Those are probably the easiest. The next ones I would say like those $500, $1,000 arcade games, pretty easy to put into like a couple units. Next tier, like a beginner theater setup, projector, a couple nice couches is like the next thing I would do. At least in Chicago. So we also have a couple in Arizona where you're competing against these multi-million-dollar micro resorts where you need a lot more. But in Chicago, you're good starting there. If you have like a rooftop or a pool or a view, that obviously helps in the building. But if you can start with king bed, pets, we don't allow them most of the time.
It seems like a lot don't. Is there a percentage? Is there a market? Like
Scottsdale, we have to. So everyone's coming for like hiking or year-round, whatever they're doing. In Houston, we started to, but in Chicago, I don't know. It's just more cleaning.
It seems like most don't. Is that normal? Is that best practice not to here?
Mostly midterm rental wise, I'm more open to it. But short-term rental, you get the next guest that checks in allergic to a cat or dog, and then you're refunding that person, and that's an issue. So, yeah. Chicago, no.
Yep. We've mentioned midterm rentals a few times. What is like the ratio you're looking for versus the base rent there? So you gave us a great, hey, on my short terms, in the peak months, we're looking to get 3X. We're looking to just kind of float in the winter.
Yep.
That midterm, what is the premium that makes it worthwhile if you're signing, the 90-day type of agreement?
Some markets, you're at 2X. I think in Chicago, 1.5X is pretty healthy in the winter. I think you can get 2X in the summer, but the summer is just so busy that I don't focus on MTRs at all in the summer here. But winter, we will strive for 1.5X. I think that's definitely possible.
Okay.
So you mentioned you have stuff in Houston, in Arizona. Do you have anywhere else? And what's kind of where you looking? Where's the business plan around where you're going? Yeah,
we kind of lost the business plan when we started expanding there, to be honest. We got these deals. We're like, all right, these look good, and we'll go with it. But
you did what the market gave you. That's what you got to say there.
Exactly. Yeah.
Just figure it out, man.
Yeah.
Which
that's page 19 of the business plan. If all else fails, figure it out.
Yeah. Which is where our focus is next. But we're in Chicago mostly. Minnesota's our second biggest. Houston is number 3. Scottsdale, and then we just got 2 in Cabo.
Oh wow! So Mexico.
So that was a whole nother.
We don't have time for that.
Yeah. Wouldn't recommend it. But our focus now is Midwest. There's not a lot of competition here compared to the East and West Coast or down south. I think people are scared of the winters. we're looking to buy now around Michigan, Indiana Dunes area, New Buffalo, Michigan City.
Michigan City's insane.
Yeah.
I've mentioned it like 3 or 4 times in the podcast. Just like you're right there on the lake. Now going into the city, like going
Back.
away from there, it's like, all right, this is like Rockford-esque, I'd say.
Area.
Yeah, but like right there on the lake, it's so nice there, and it's so affordable compared to going further up north there, or like it's half the price of Lake Geneva.
And it's an hour and a half max.
Yeah,
Which is nice.
If you're on like the south side, like where Jared lives, it's probably like 40 minutes. Like
Jared gets to his place. He's got 3 on Indian Lakes. He gets there like in an hour. So he's got all the casino, the slot machines and all that stuff. He does it for free.
Oh, there
but
you
that's
go.
what he puts in there as
Interesting.
as his. If you need him, he's got him for a good deal. I think. Sure. I think he's selling them on the side.
That'd be great.
He's got a guy.
there you go. All right, I'll stop talking about Michigan City 'cause I don't want the secret to get out. I don't get
That's
priced
already
out.
yeah.
All right, so do you continue? How much of these are you buying versus arbitrage? Is it just what's how the market's coming at you?
Yeah, ish. So every year the goal is to buy one property. This year we want to buy 5. The arbitrage has been a great starting point and a great credibility for our business model and our brand. However, it's obviously not long-term wealth. It's more the cash flow game.
Yeah, you don't have the equity.
You don't have the equity.
Yeah, this
Tax
I love this
write-offs
mindset. It's like the same guy who says like I'm going to wholesale until I can buy something, but then they never do it. Like that's what you're doing.
Yeah. So 1 a year. The goal is 5 this year. There's just people now that are like, hey, if you need cash, let's buy something together. We'll do more of the GPLP structure. Well, we've always thought we needed to use our own money to buy the properties, but at this point, why not just leverage other people's income or cash and get some more properties? So we definitely want to buy more moving forward.
Yep. What the returns have to be pretty decent though for them to invest with you, right? So
Yep.
how much of this, like let's say you go into a Michigan, say somewhere you haven't been, is it almost like, hey, year 1, this might be break even. We got to get our name out there. We got to get the repeat business going.
Yep.
Like what is the quote unquote startup to when you buy a new place?
Startup cost total, like fully.
Yeah, whether it be tangible or intangible, like, or what is like the
Learning curve.
at what point are you cruising?
So that's the tough part about going into other markets, because figuring that out and anything. But let's call it Chicago. So the last property we bought in Chicago was the one right by the United Center. It came fully furnished and pretty good furniture. Bob's Furniture, like pretty good for an Ashley Furniture. Like everything was decked out. We spent maybe $5,000 doing some paintings and some touch-ups here and there. We were profitable. We covered our rents, or we covered our mortgage, because we closed in January. By March, we were profiting in terms of we covered our mortgage for the first 2 months, and we were in the green for March. And then after that, we were in the green. I think we profited $80,000 that year in terms of profit, $200K in revenue for the year. So what do we tell like investors if they're looking to invest? We'll give them a 10 to 12% prof. What we've done up until now is if let's say my brother invests a quarter of the cost of the down payment, we will have him own a quarter of the property too. We won't do that in the future because obviously that's a stupid deal.
Yeah, that's a great deal.
I'm like,
for
I'm in. I'm like,
Everyone's told us that, but it's definitely like, it was family at first, got them some wealth, but now it's
Yeah,
like, all right,
yeah.
let's not do that anymore.
Yeah.
But that's what we did in the past.
Okay. What have you had to refi any of these?
Yep.
And if so, talk to us about that process with the bank, because a lot of banks are still like, how are you getting the valuation you need based on your numbers? Or are banks coming around now and I'm just out of the loop?
Both, right? So one property in Logan we bought for $750. The area's it's like on the corner of Logan and Bucktown. So the area's obviously grown a ton. So after a year, we were able to refinance it for $1 million. So it was a quick $250 there, and that was just mostly, I believe, from the appraisal of the area. The other home that we have in Bucktown, they did it more on the rental income. So some lenders are coming around to the short-term rental income that you have shown on the property for the last year or two. So they will lend.
Based on seasoning, right? Is
Yep.
that okay?
Exactly.
And how do you have any guidance for like, all right, they look at your gross, like they're looking at the expenses. Is there like an expense ratio they use, or is it just?
I don't know the answer to that. I do know that we gave them both. I don't know what they based it off of.
Is what they gave you close to what you were expecting?
Yeah, so we bought the property for 1.07. We refinanced for 1.4.
Okay, sounds healthy.
Yeah, it's healthy.
Cool. All right. Anything else?
That's it. That's
Dude,
all.
I love these episodes where I don't know anything.
Yes, 'cause it's so
Sorry,
easy to
I
rattle
like
questions.
dominate all the questions. Like,
I was
what's
just
this?
thinking, I felt like I did. So, all right, we both feel the same way. All right, cool.
All right, let's wrap.
All right, cool. What's your competitive advantage? How have you been able to do this while others wish they could?
Man, finding a way, whether it's getting more properties, getting more people on the team, more cleaners, like it's hard for me to slow down and I just get after it. And my mind's always trying to figure out how to make it work no matter what and just work my ass off until it happens.
Yep, great answer. All right, Sebastian, what's the one piece of advice you would tell someone that is yet to buy their first property here in the Chicagoland area?
Don't overanalyze. Look at the numbers a little bit, pull the trigger. Worst thing that happens is you sell the property and chances are it's going to be more in a couple of years anyways. Just pull the trigger. I think a lot of people have analysis paralysis and never pull the trigger. Your first deal is not going to be a home run. Just get on first base. You got your first one. Just keep going after that.
What do you do for fun?
I'm big into fitness right now. I just did my first half Ironman on Sunday in Rockford, actually.
Oh, there you go.
So I'm training for the full September 7th. So
What's a half Ironman? What do you?
It's 1.2 swim, 56-mile bike, and then a 13.1 run.
It's a lot.
So
What's the hardest part for you?
I thought it was going to be running because I hate running, but this time it was 95, so the bike and just being bent over for a couple hours was definitely challenging, and the wind and the cornfields were pretty brutal. Not the cornfields, the hills and the wind were pretty tough there.
There you go. All right, what is a good book, podcast, or self-development activity you'd recommend to our listeners?
12-Week Year. That is the book that I'm reading over and over this year until I master it because I know a lot, but I wasn't executing at the pace that I should have been. But now our execution as a team is just creating a lot of great results. So definitely recommend that.
I listen to that every December. Like
Do you?
kind of get right, yeah, because it just chunks everything down and get things done faster and
It's the best.
speed to decisions and all that. So,
Yeah.
other than yourself, name a valuable resource for Chicago and real estate investors.
Valuable resource. Totally probably different than, I don't know if you guys have had Skyscraper Tom on, but he buys skyscrapers in the city.
Yeah, so he's Tony P's networking event. So
Yeah.
I've just shaken hands with the guy. I have not like formally met him.
I've been learning from him a little bit on raising funds and structuring deal flow, but like the massive type of deals that he's working on and doing is definitely opened my eyes to like what's possible and what else to do out there besides the traditional real estate investing.
That's good stuff. All right, Sebastian, thank you so much. You brought a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Thanks for having me on. Instagram, you can check out our Facebook,
Well, Mark's getting right on it here at Instagram and just like, boom.
our website, thedreamrentals.com, how you can add value. I mean, deal flow is always great. We're always open to building our team with the right people, with the right skill sets. So if you want to email me, Sebastian@dreamshy.org, more than happy to chat, answer any questions. I'm always here to give value and add as much value as possible.
Man, I love it. I'm ready to submit my application. It's like what you guys are doing is so cool.
Yeah, and we'll link to all that contact in the show notes.
Yes.
All right, we end with our Chicago fact. Who are we playing for?
All right, we're playing for Evan M. I pulled it and it just said M. So, Evan, if myself or Sebastian gets this question right, you will get a $50 gift card brought to you by today's sponsor, Chris Pulio from Neighborhood Loans.
All right. We have a University of Illinois alum across the table from us. So I went with the Champaign, Illinois question. So in 1985, Champaign, Illinois held the first And your options are Big Ten football game with lights, Farm Aid concert, computer hacking competition, or professional ultimate frisbee game in the U.S.
I'm going with D, professional frisbee.
I'll go with A.
No, guys, Farm Aid.
I don't even know what that is. So that's what is it?
Every year there's a huge concert that gets like famous people, and they raise $10 million, $20 million for farmers.
It's called Farm Aid. That's
Yeah.
I never heard
This
of it.
is like a big thing. Like, so that first
I've
concert.
never heard of it.
Was it that
guys,
big?
come on.
Actually, I never heard of it. That's
All right, that first concert had Bob Dylan, B.B. King, Tom Petty, Roy Orbison, like
Wow.
some heavy hitters, and even the ones today, like you get all these. I don't know country music, but like all the country singers are.
Really?
Yeah, like this year's one is in like Minneapolis at the U.S. Bank, like at the big thing.
Okay.
Oh, got it. So they hosted the first one, but it's not there anymore.
Correct.
Okay.
Gotcha.
That
All
makes
right.
more
Well,
sense.
Evan, we apologize. We got that one. Me and Sebastian both messed that one up for you. So we will put your name back in, and thank you for your support of the show. And you have the chance to be a Chicago Fact recipient again. So, Sebastian, thanks for coming on. Tom, thanks for coming on. Listeners, Tom and I want to hear from you. Let us know what you're working on. Maybe we could help. Maybe we could connect you. Maybe you could just teach us something. So check us out, Facebook, Instagram, LinkedIn, or on the Straight Up Chicago Investor page where you can go to contact Tom and Mark. So thank you, Sebastian. Thank you, Tom. Listeners, we'll see you next week.